Know China to do better business. Save time and money with expert insights on China trade and investment. Welcome to our channel Trade with China. Imagine billions of petrodollars silently finding their way into China's most innovative startups and infrastructure projects. Over the past 2 years, Middle East sovereign wealth funds have accelerated their eastward strategies, reshaping global capital flows and forging deep partnerships with Chinese industries. In the next 7 minutes, we'll unpack the growth trends, sector focus, and standout case studies that every investor eyeing China needs to know. 1. Growth trends. A surge in capital flows. Since 2024, Gulf sovereign wealth funds have nearly quadrupled their direct investments in China, with total commitments exceeding $10 billion by mid-2025. This represents a more than 20% year-on-year increase, driven by the Gulf's push to diversify oil-dependent economies and tap into China as high-growth markets. Fund assets under management in China have shifted from bulk commodity plays toward higher-value technology, healthcare, and renewables. 2. Key players in investment vehicles. Abu Dhabi Investment Authority, ADIA, assets, $1 trillion under management. Entry points. Qualified foreign institutional investor, QFII, quotas, private equity arms, and direct acquisitions. Mubadala Investment Company. Focuses on high-growth consumer and industrial technology through joint ventures and co-investment platforms. Qatar Investment Authority, QIA, leverages sovereign liquidity to acquire strategic stakes in public asset managers and fintech ventures. Prosperity 7 Ventures, Saudi Aramco, targets frontier tech and industrial AI via growth stage venture rounds. 3. Sector focus. From finance to hard tech. 1. Financial services and asset management. QIA acquired a 10% stake in China Asset Management, ChinaAMC, unlocking management fees and distribution networks in Asia's largest mutual fund market. 2. Logistics and digital infrastructure. ADIA's $1.5 billion investment in GLPS, Greater China Logistics and Data Center Division, underscores its bet on e-commerce and cloud adoption. 3. New energy and automotive. Through its CYVN subsidiary, ADIA injected over $7 billion into NIO's equity and convertible bonds, becoming the EV maker's largest institutional shareholder and enabling NIO's rapid product expansion. 4. Biotech and healthcare. Funds such as Israel's Sphera Global Healthcare have backed WuXi Biologics and Innovent Biologics, tapping into China's booming contract development and manufacturing organization, CDMO market. 5. Hard tech and AI. Prosperity 7 Ventures led Series D rounds for Chinese robotics firms like Fourier Intelligence and Kihan Technology, aligning Saudi Arabia's industrial AI ambitions with China's tech ecosystem. 4. Deep dive case studies. ADIA and NIO powering the EV revolution. July 2023. CYVN's initial $738.5 million equity investment stabilized in NIO's balance sheet. December 2023. A further $2.2 billion at $7.50 per share boosted NIO's cash reserves to $6.2 billion, outpacing major automakers in R&D investment capability. October 2024, Joint R&D Center announced in Abu Dhabi, focusing on autonomous driving algorithms and AI chips. BQIA and ChinaAMC unlocking asset management growth. June 2024, QIA agreed to buy a 10% stake for roughly $490 million, subject to CSRC approval. May 2025, Chinese regulators approved the deal, granting QIA co-investment rights in flagship mutual funds and ETFs. ADIA and GLP building the digital backbone. September 2025, ADIA committed up to $1.5 billion into GLPS logistics parks and hyperscale data center platform, aiming to meet 80% of China's projected data center capacity growth through 2030. 5. Strategic implications and outlook. Diversification and risk management. Gulf states mitigate geopolitical tensions by partnering with China's largest SOEs and high-growth private champions, balancing Belt and Road cooperation with Indo-Pacific strategies. Ecosystem synergies. Joint ventures and R&D centers in Abu Dhabi or Riyadh accelerate tech transfer, local talent development, and market entry for Chinese firms. ESG and sustainable growth. Middle Eastern funds require high ESG standards, channeling capital into renewables, green hydrogen, and healthcare infrastructure aligned with China's carbon-neutral targets. Future themes. Watch for increased co-investment platforms in semiconductor design, advanced materials, and digital healthcare areas where both capital and expertise flow bidirectionally. By strategically deploying sovereign capital, Gulf funds are not just investors but co-architects of China's next economic chapter. For global investors, understanding these partnerships offers a roadmap to align with winning sectors and to anticipate policy support for joint ventures. This channel will bring you practical knowledge to navigate business, investment, culture, economic trends, and communication tips. Your comments really encourage us to realize our video value and update more useful information. Subscribe now for actionable insights and win-win solutions. Not to miss the possibility to understand and make money in trades with China.